All right, so we are closing in on the end of the class. One last module of new material, Chapter 10, Responsibility Accounting. And in Chapter 8, there was one question where I tried at the very end, and the numbers were a little off, and I said I'd go fix it, and I went and fixed that one question, and luckily that was the only question that had that kind of error in it. So if you look back, if you look forward and try out the final exam review quiz. Actually, I'll make sure that is. I'll double check that. I double checked the Chapter 8 quiz, and I believe that will feed through to the review quiz, but I will double check that. Double check review quiz. So you probably won't have that. You shouldn't have that mistake on the review quiz or the final for Chapter 8 problem. Okay, just the very last question we did, I believe, in Chapter 8. All right, so let's just jump into Chapter 10. We have two things we're going to cover: service department cost allocations and transfer prices. So two mechanisms that help us assign responsibility. And yeah, no, I am throwing shade at Ready Player One. Great graphics and everything, but yeah, they couldn't give it away at Walmart, apparently. So it's a joke. The theory of this, I'm going to race through it real quick, but I think it stacks up nice and easy and still make a lot of sense, even though I'm going quickly through it, is that in a large firm, compared to a small firm, you're going to have to decentralize decision rights because information is decentralized. You have an asymmetry of information. How many of you have heard of the show Undercover Boss? How many have watched it? How many have cried? Oh, be honest. Be honest. All right, so let's look real quick. Let's Google Undercover Boss, because Google is my TA here. Undercover Boss. I want the Wikipedia. Here we go. Undercover Boss. Okay, so there's a disambiguation here because it's a franchise. It is in some version in all these countries. There are lots and lots of countries that Undercover Boss is in some version, one way or the other. Wide appeal across the whole planet. Because its drama is inherent to the nature of a business. You have somebody at the top of the hierarchy of the business going to somewhere lower in the hierarchy. There are bound to be A, surprises because of the information asymmetry that has to do with Chapter 10. And B, there are also probably going to be socioeconomic differences and, of course, the giving away of money for people in need at the bottom of the hierarchy of the business. And that makes good TV. And like I said, people cry. All right, so going back to the non-crying part, the information asymmetry means that in a large firm, you have people on the front lines who are going to know things about the business that the people at the top don't. Just because if I'm the CEO, I have one brain, at least for the time being. I have just one brain. And there's just no way that the computing power of my one brain can equal the computing power and time for experiencing the front lines that the thousands of people on the front lines of my business have time for. They have more information in them. And my reports and all my accounting information and the managers and qualitative feedback are all trying to aggregate that information and bring it up to me. But at the end of the day, there are still such limits that it's never going to be the same. It's never going to be quite right. So the story I like to tell is we start out as a hot dog vendor because you like hot dogs. And you start as a hot dog vendor and you have your cart. Okay? You are the one-person business here. You are the CEO and the frontline employee. You have 100% of the information about the business. You get to see people. These are the kinds of hot dogs they like to order. These are what they like to have on top of the hot dogs. These are the hot dogs they reject and turn back or whatever. They like this. They don't like that. I directly talk to the suppliers. I see what hot dogs they have, which ones look like they've been in a vat of water for a long time. I can, no, that supplier, no. The supplier, yes. I know all these things directly. I have all this information. Okay, I'm very successful now because I've done this well. I now open a hot dog restaurant, which they do exist. I don't know if there's any around here that just specialize in hot dogs. There's a hot dog restaurant. I own the hot dog restaurant now. I own it. So I probably have a manager or series of managers that run the operations. And even those managers are now removed from some of the information that I had as a hot dog vendor. Even the managers are probably only on occasion seeing customers as they order? Do they like things? Do they not like things? What do they send back? What do they put on top of them? They can see reports of that, but that's all in the aggregate and misses some of the detail. Some of the detail has to be squeezed out of it to create an aggregate report. Also, what is a supplier situation? So you start to see there's a customization or a differentiation, decentralizing of the information, and probably decentralizing of the decision rights. So, for example, when I'm the hot dog vendor, just the one person, I probably have I know when I should accept a refund. Like, oh, you know what? I did mess up that hot dog. You ordered it wrong. I can turn that back. I have the decision rights over that decision that affects the profit of the business. I'm losing the cost of that hot dog by getting a refund. Whereas if I own a restaurant, I'm probably not making the day-to-day decisions of whether to accept the plate returned and refund that money, or make a new plate or whatever it is. That's on the shift manager or the waiter or waitress. It's down at a lower level because the information is down at a lower level. So the idea here is information gets decentralized as your firm gets larger, and we could take that one step further to say, what if I own a chain of hot dog restaurants? I'm even further removed from the rest of the information. But the idea is, as you get larger, the information, the knowledge is decentralized, and therefore your decision rights are going to have to be decentralized and delegated as well. And so if the firm, the leadership of the firm wants to do their job, which is they are agents of the owner of the firm, the managers are the agent of the owner of the firm, trying to maximize profit for the owner of the firm, be that shareholders, be that closely held, a small group, be that a sole proprietor or partners or whatever, I'm going to need to find a way to hold responsible the people who have the decision rights that affect profit for the firm. I hold them responsible for the decisions that they make. So that's why this is responsibility accounting. These are specific mechanisms, 3 of them. We're going to cover 2 of them in the quiz, so you can focus on 2 of those specifically. 2 general classes of techniques that we use to hold people responsible for the decisions that have been delegated to them. We classify these into 3 general responsibility centers to kind of disentangle what kind of decision you are making, or your role has, I should say. And so managers can be either a manager over a cost center, manager over a revenue center, or a manager over a profit center. And those tend to stack. Before I said that they didn't stack. Let's just stop there. Okay, they can be one of these 3 typically. So this one stacks. The profit, of course, profit is revenue minus cost. And the idea is, do I have the decision rights in the firm? I can make decisions that primarily affect, for example, costs in the firm. All right, if you're working at an industry, at a corporation in their accounting department, welcome to life as a cost center. You're part of costs to the firm. You really, again, we're talking about a company like Simplot, for example, over there, they have lots of accountants. Those accountants are not bringing in potato revenue. They're all cost to Simplot. They pay for themselves because they do good work that Simplot needs them to do. They do compliance work. They do work to improve profitability and so on and so forth. But the point is that they don't directly bring in revenue in the main revenue. So they're a cost center. Do I control revenue? No. Do I control costs? Yes. And we're talking about materiality as well and directness. So yeah, there's a possibility a cost center manager might control some small revenue stream, or that a revenue manager does indeed control some amount of costs related, for example, to the sales team. But we're talking about the primary decisions that I have as an accounting department manager, as an IT department manager, as a legal, the counsel's office manager. All these are cost centers that don't bring in revenue. We're talking about in most businesses, because they aren't in the accounting, the IT, or the legal business. What about revenue center? Well, typically we're talking about a sales team. So if you're the manager of a sales team, you're probably manager over a revenue center, or manager over a store or a storefront. You're manager over a revenue center. You're bringing in revenue. You're bringing in, yes, revenue, but not really controlling much about the costs. Maybe small ways, but not in a significant way. And then if you control revenue and costs, you're in a profit center. You're the manager over a profit center. All right, so you've been delegated decision rights for the firm that affect both the revenue and the cost side in a significant and material and direct way, and you're a manager over the profit center. To tie that into what we said before, the basic idea of all this is to hold people accountable for the cost that their cost center incurs, for the revenue that their revenue center generates, and for the profit that their profit center generates. You can do that very quickly and easily with a lot of the accounting measures that we develop, either through typical financial reports or through specialized internal reports like we've talked about throughout this class, through an ABC report, which is not a GAAP-approved report, so it's not going to show up in a financial statement, but you might have that to hold your profit center people responsible for the activity-based costs that they're incurring. Or a lien report. For example, if you're a lien company, you can't use that on your financial statements, but you might have an internally generated lien report to hold somebody who's a cost center manager responsible for the costs that he or she has incurred, that the decisions that person has been delegated have incurred. And so the first category of questions we're going to go over are service department cost allocations, because service departments are cost centers, and they provide benefits to production departments, which are often profit centers. And so we're trying to figure out, well, how much of this responsibility for the cost of this cost center that's used to benefit the profit center or to benefit a production department that's just separate another cost center, how much of that responsibility should go to one manager who has responsibility over one thing? How much should go to a different manager who has responsibility over a different thing? So we're going to focus on this now. This is the way we're going to talk about it now, as service departments and production departments. We're going to kind of leave the idea of centers behind. That's a good theoretical framework. We're going to move over towards a more practical framework here of we're talking about service departments and production departments. And a lot of the same departments are going to be mentioned. So your service departments are the same ones I talked about as being cost centers only, like accounting and legal and IT. And if we're talking about manufacturing, things like your maintenance department, things like your power department, those kind of departments are important. I have highlighted production. These are all service departments. And they serve the main manufacturing or production of the main product or good or service that you're bringing to the market. And that's in your production department. All right, so the basic idea here is that this is pretty straightforward unless you have interdependency, which you almost always have interdependency. The idea being, it's pretty straightforward, meaning the responsibility for the cost of the cost center should go to the production, they should be moved over and allocated to production departments that use those services. Okay? So if I use a lot of maintenance costs on my factory, in my factory as a production manager, let's say I'm the factory manager, we're a production department, but I use a lot of maintenance costs, I should be charged for those maintenance costs. Those are, I'm responsible for. I caused those costs to be incurred in that cost center, that service department. Excuse me, I said I was going to move over to this terminology. In that service department of the maintenance department. So I should be charged those costs. We do that based on cost drivers. So, for example, that's all in percentages here. Do I have any examples that aren't in percentages? Some of the questions are not in percentages. So, for example, let's say the maintenance department just tracks its labor hours, and it incurs 100 labor hours during the week or whatever, and my department's responsible for 50 of them. Well, I should probably get 50% of the maintenance department's costs as a result of that. That's kind of the general idea. That works just fine if service departments are only serving production departments and not serving each other, which they almost always are. That's what I mean by interdependency. Service departments are interdependent. And that's what this cell right here and this cell right here represents. So service department 1 serves service department 2. 20% of its work is towards service department 2. And service department 2 serves service department 1 as well. 35% of its work is done for service department 1. Okay? So we have some interdependency between these service departments. Now it's a little less clear what we should do. There are 3 ways of tackling this, 3 different methods that you'll be asked about on the quiz. 2 you have to calculate for, and the 3rd you have to understand and recognize some of the characteristics of. So first we have the direct method. The direct method is to ignore. Yeah, denial. Our first go-to is denial. Let's deny there's any interdependency. So we're going to act like this is 0 and this is 0. And then we have to recalibrate these percentages so they add to 100 again. All right? So right down here, the direct method. We're going to zero these all out, all the interdependencies. Nope, we're going to act like there's nothing. And then if you look carefully at this cell, I've highlighted it and kept the formula bar here. It's E4, which is our original 35%, over the sum of E4 and F4. So our new denominator is all the production work done, which is 80%, 35% plus 45% is 80%. So 35% over 80%. So in other words, I can say it this way, if I say it real long-winded, but correctly. Of all the work Service Department 1 did for production departments, what percentage of that work was done for production department A? So that 35% over 80% factors that in. Then when you do that division, it turns out to 43.75%. All right. If you went over this cell, it would say, instead of up here, it would say F4, the 45%, over the sum of E4 and F4, over the 80%, which is the sum of those two. So 45% over 80% gives us a new percentage of 56.25%. And we do the same thing with Service Department 2. We get rid of this 35%, make it 0, and we recalibrate our percentages here. So they're out of the 65% of work that was done just for production departments. So this right here, 60% out of 65%, well, that's the majority of it. That's 92.31%. That's a lot. That's a significant change to the percentage of work done, of what we're considering to be the work done. Over here, that 5% over the sum of the two, 65%, gives us a new percentage of 7.69%. All right, that's the hardest part of the direct method. Refiguring your percentages based on the denominator of only the work done for production departments, as if that were all the work done. And then you're going to multiply the service department costs by those percentages. That 100,000 gets multiplied by 43.75 to give us 43,750 right here. That 100,000 gets multiplied by 56.25% right here to give us down here $56,250 right here. So in total, we are allocating all $100,000 between the two production departments, and we're deciding how much each production department gets based on these percentages here, which are a reflection of how much this percentage was over the total amount of work done for all production departments, and how much this percentage was out of the total amount of work done for all production departments by Service Department 1. Same thing with 500,000 for Service Department 2. Service Department 2's costs were 500,000, and 92.31% of those should go to Production Department A. So that's right down here, 461,538.46. And 7.69% of that 500,000 should go to Production Department B, and that's right here, 38,461. And so if we sum those, our total allocations to Production Department A, in this column right here, comes to $505,288.46. Our total allocations to Production Department B come to $94,711.54. In total, we have allocated the $600,000, that's right here, from service departments to production departments. We've held the production departments responsible for the work done by service departments that exist to serve the production departments. And we've done it by ignoring, we're in denial, an orange of denial or whatever, about any interdependency. We're just gonna wipe that off. We refigure the percentages. We get those new numbers. Now, on the tier of there are two measures we can have. One is how accurate is it, this method, and one is how easy is this method. And direct method does this. It's the least accurate of the three, but it is the easiest to do. Now, I know if you're struggling with a problem, you're gonna be like, no, it's not. I know. Of the three methods, it is the easiest to do. You will agree with that. When we get to step-down method, you'll say, yeah, no, there are fewer steps in direct method. I get it. And the reciprocal method we don't even do, but I think you'd agree with that. It's gonna be a little more complex.
So the questions on the list, will it always be like service department or production department, or is that just an example? And so all we're doing is for the raw data columns, we're just looking to see which ones match on the top of the row of what those two say. So like would you ever say something other than like service department, and then we're just looking on the row above to see whatever you put to the side, where was the same?
They look really similar to this.
Okay.
This part right here. In fact, let's pull one up real quick. This is a good question. Let's just look at it real quick here. Skip that one. They look really similar in terms of we have Service Department A, Service Department B. They do work for A, B, and do production departments X and Y. Does that answer the question? Yeah. And I give you the costs down here in paragraph form, but I'm giving you the same information ultimately as is right here. So I set up the information a little differently occasionally, but most of the problems have a table like this that tells you how much work is done for each possible recipient of the service department's work. And yeah, the rows, this I think was directly your question. The rows are always, I think always, I can say that, are always just, this is the service department's work, and then tells you what the work done for all the possible recipients are. Yeah, that's definitely the focus and how I set it up each time. All right, let's jump to the step-down method, which I got into, should I make people angry? Creating a GIF. Yeah, I know. Hot debate. Is it a GIF or is it a GIF? I know, it's hard. Just comes out the tongue easier for me, sorry. But I created this, yeah, wow, I'm impressed with myself. So the basic idea is, the step-down method says, we're gonna order our service departments in terms of when they get to recognize interdependency, in terms of from top to bottom. Best way to kind of start this idea? Yeah, we're fine, we'll get into it. So what we're going to do first of all is, in this example, we have 3 service departments, and it's only for this example. I don't think I have any step-down questions that have 3 service departments. I'm always having 2, because it's just the easiest way to structure the problem, the easiest chunk pedagogically to assess you on. I don't want to get these complex problems that are just, you get wrong because there are so many moving pieces that on the test you can't keep it together in your freshly made Excel. I want to test your knowledge of the principles rather than your organization skills as much as I can. So, but in the example here, we have 3 departments to give you as much of the gamut as possible. And so if you're at the top, all interdependencies are recognized. You get to allocate your costs to all production departments and all down-step service departments. So we do that first. Top step is the first step. And then, like water, it flows downhill. Then we go to service department number 2, the second one in the list, in our ranking of step, our step ranking. Because you can do it for a variety of reasons. Some companies do it by how much interdependency is each service department has. There are different ways to measure that as well. And some companies choose just an arbitrary order in which to do it, or different reasons for doing it. Regardless, the second step here, it's going to also allocate to all production departments and all down-step service departments. But like water, it never flows uphill. You don't allocate to an up-step service department. So service department 2 goes to all, wait for it, the yellow, all 3 production departments and service department 3. Service department 3, it's as if we're doing the direct method. We do just production departments. That's the black, the long dashes. In case there are, you have trouble seeing color, I also changed the length of the lines here, so it's easier to distinguish. We've got dashed lines here for service department 3. It's just allocating its cost to production departments. It can't go upstream to any of the service departments. So the bottom step in a step-down method always does basically the direct method, because it's not incorporating any of its interdependency. Because there are no more service departments that are downstep of it. The top step is basically doing kind of what we do with the reciprocal method, and it's incorporating all of its interdependency. And if you're in the middle, sorry, Jan, you're kind of like a mix. But there are no problems like that. So, how does that work in practice? And so the illustration just uses the 2 service departments and the same numbers as before. So if we order them like this, and we say, well, we want service department 2 to get the first step. It's our top step. We're going to take that 50,000 and multiply it by its percentages. No changes to the percentages. Just leave them as they are. So that 50,000 times 35%, because that's the amount of work service department did for service department 1. 35% of his work was for service department 1. You end up with $175,000, and that is the allocation. And when I say allocation, we're talking about a literal debit to the receiving department's costs ledger and a credit to our ledger. Like, we are literally moving those costs to a different company code or department code. So that $175,000 is being credited to service department 2 and debited over to service department 1. And 500,000 times 60% gives us $300,000 here. $500,000 times 5% gives us $25,000 here. Great. Service department 2, check. It's the top step. Now we go down to the second step, which is service department 1. First thing we have to do is recognize it had $175,000 of cost debited to it. So it doesn't have $100,000 cost anymore. It has $275,000 cost. That is a critical step that a number of students likely will make, given the odds, because you'll forget that piece. You'll start calculating based on the $100,000. No, that is, when I say up here, the bottom step is like the direct method, I mean in terms of how it does the percentages. Notice these two percentages are the same we saw up here, 43.75 and 56.25. The percentages are the same. But the bottom step has received all of its brother and sister service department costs allocated to it based on how much it consumed those other service departments. So it's not going to have the same cost number over here. So instead you take this new 275,000, which is B4, that 100,000, plus C8, which is the allocation from service department 2, this 275,000, and multiply it by the new percentages once you've zeroed out the up step that you can't go there. So now of the remaining departments in the denominator, the remaining departments of this 35 and 45% of our work is done there. So 80% here, 35% over 80% gives us again 43.75%. 45% over 80% gives us again 56.25%. Multiply 275 by 43.75, we end up with now 120, 312, and multiply that 275 by 56.25, you end up with 154, 687.5 over here. So you have new numbers in terms of what's being allocated to production department A and production department B. We allocated way more to B under the step-down method than we did under the direct method. It was under 100,000, the allocation to department B. And therefore, this was over 500,000 over here, the allocation to A. When we go down to the step-down, production department A has gone all the way down to $420,000. Production department B has gone to $179,000. Yes, okay. I wasn't carrying a 1 or something. I thought that was too high. You add those together, you still get $600,000. Good. Yeah, we're still allocating the same $600,000. We're just rebalancing it more to B, less to A than we had before. So the method that you choose matters, and those production department managers, they care. Yeah, because that's my bonus. We had a profitable semester. About to say semester. We had a profitable month till you came in here with your allocation. I'll allocate you. They don't like it if you choose the wrong method. Well, if you choose a method that disadvantages them. Well. Okay. The reciprocal method. Okay, wait. First of all, we got our rankings, right? Direct method was the least accurate, but the easiest. Step-down method is the middle in accuracy of the three method and the middle in difficulty. So it incorporates some of the interdependencies, but not all of them. It ignores some. It makes sense, actually, if you look at this situation, why does it make sense that we're allocating more by when we reflect on what's actually happening in the company and the interdependencies that are actually being accounted for now? It makes sense that we're pushing more costs to production department B, because production department B was consuming a higher percentage here of service department 1, and service department 1 depended somewhat on service department 2. And so it was getting away with the fact that, well, I don't directly use a lot of service department 2, but I mean, through service department 1, I kind of use some of service department 2's, but that doesn't get recognized under the direct method. I can ignore all that. The only thing that gets recognized is, as far as my department B's connection to service department 2, is just 7.69%. Great. I saved a lot of money there. Let's forget about the fact that some of this work right here that service department 1 did for me was funded by service that department 2 did for department 1. One couldn't have done that work for me if 2 hadn't paid all that money to serve 1. And so the fact that we're now incorporating that into our calculation makes a lot of sense, or because we're incorporating that, it makes a lot of sense that now service department B is getting a lot more costs allocated to it as a downstream effect. Yeah, Jack.
When we're taking the quiz and we're doing the step-down method,
Mm-hmm.
are we always, so I saw that we did department 2 first is because 35% higher than 20% for the at the top? Like, what are we always going to be ranking it that way?
No, I'll tell you. Every question tells you what every step 9 question says. This is the first step, or this is the one they chose to allocate first, and this one second. Because there's no set rule as to how you do it. You could do it by magnitude of the percentage. You could do it by magnitude of percentage times dollar amount. You could do it by some other measure that tries to get at the interdependencies and try and rank them that way. Or like I said, the word I used earlier for this was sometimes you can use something a little more arbitrary, like, well, service department 2, my nephew's in service department 2, and so we're gonna make that the top step, or I don't know. It could be. Companies have some flexibility to do this. Insofar as it's an internal reporting mechanism, they have some flexibility to do this. Insofar as it touches on GAAP, I think they're going to require a rationale that fits within the GAAP stricture, and even then, though, you probably have some leeway in how to measure it. And because I'm not going into the depth of trying to get you to be an expert in how to do that, I just tell you how to do it in the problem. It's enough, I think, to get you to learn these steps once you know that, hey, in this problem, service department 2 is the first allocation. Service department 2 is the first allocation. All right, good question. That's good. Reciprocal method. We'll talk about it real quick, and then we're going to do let's look at some service department cost allocation problems. So reciprocal method, actually, it's not that hard. What's hard about it is that you can't as easily pin down why the costs are the way that they are. It's harder to explain. It's harder to say, well, this is what happened, because it's incorporating all of the interdependencies. I've done this. I have not done it 2 ways. I'm going to do it 2 ways. Let's start with, this is our reciprocal method example. So let's copy over. I'll have to do it manually. I'm going to move this over here. So we have S1, S2, we have costs, 100,000, 500,000. Right, and now we have the recipients. Consumption of services is what I label it as. S2, PA, and production department B. And then we have 0, we have 0.2, we have 0.35, we have 0.45, and here we have 0.35, and here we have 0, and here we have 0.6, and here we have 0.05. So yeah, they equal, put 0.5 instead of 0.6. There we go. And this equals 1. That equals 1. Good. All right, so I just copied over this fact pattern right here. All right, so first I'm going to explain the algebraic way to do it, which is right here in the textbook. So the algebraic way to do it is to solve it like a system of equations. Okay, cool, not bad, because you have these 2 things. Service department 1's costs are $100,000 plus the 35% of service department 2's work that it consumes. So whatever SD1's real total costs are, they incorporate that. And likewise, you can express service department 2 as $500,000 plus the 20% of service department 1's cost, or 0.2 times SD1, that it consumes. And what we're doing is we're solving for allocation basis, meaning the total number of, to put it in accounting language, the total number of debits we're going to be debiting in this situation. Some of them are going interdependently, and so they'll be canceled out by credits. So we're going to end up with an allocation base or allocation bases that sum to more than $600,000. But that's to incorporate the fact that some of them are getting canceled out between service departments. So what we can do is we can take the SD2 definition, that everything on the left, or the right hand side of the equation here, and plug it in for right here, SD2. And that's what I do in the first line. And then you simplify that, and you end up with 0.93 SD1 equals 275,000, which means that SD1 must equal, once you divide both sides by 0.93, 295,699, and I rounded that off. SD2, now that we have this SD1 number, we don't have to use the long explanation of SD1. We have a number. So we can just plug that number in to the SD2 equals 500,000 plus 0.2 SD1. Just plug that in right there. We end up with 500,000 plus 59, 139.8. We end up with 559,140 once we round. We can use those as our allocation bases and then literally multiply those numbers by these percentages as if they're both top step service departments. And we end up with our total numbers. You end up with numbers here and here, but notice that they are going to cancel each other out. So we have an allocation base of service department 1 of $295,699, and portions of that are going to these two production departments, but there's a portion here that is going to service department 2. Well, that 59,140 just happens to be the amount that service department 2 is over, that's allocation base is over its actual cost. So it's 559,140 is its actual cost plus what was debited to it by service department 1. And we go back to that 295,699. It's that $100,000 is actually service department 1's cost plus the 195,699 of service department 2's costs that are being debited over to it. So this minus this minus this minus this cancels out. It equals. We can go check that if you want. If you don't believe me, you can go check it yourself too. Maybe I won't do that. I don't want to run too low on time. And this also cancels out. This 559,140 minus this minus this minus this equals 0. So in total, we have two service departments tossing costs to each other, and in the end, tossing this amount of cost and this amount of cost to production department A and B, respectively. And so we have $438,979 to production department A, an allocation of $161,000-ish to production department B. Now, it doesn't always work out this way, but these numbers are somewhere between the direct method and the step-down method. So if we look back at direct method, we had just over 500,000 and just under 100,000 for A and B, respectively, being allocated to A and B, respectively. When we went to step down, this went way down to 420,000 allocated to production department A and 179,000, almost 180,000 to production department B. And now that we have accounted for all of the reciprocity, all of the interdependency between service departments, we have 438, almost 439,000 for being allocated to production department A, and we have 161,000, almost even, being allocated to production department B. Still sums to $600,000. We're still taking the original $600,000, allocating it between the two production departments. We solved it algebraically here. Now, what I can show you is that it doesn't have to, this is also what you get if you just kept allocating until you got to cents. So what we're going to do is we're going to say, all right, the service department 1 allocation, the service department 2 allocations are just its percent times its cost. I'm going to make the column. All right, and so now service department 1's costs include the $175,000 that have been pushed over to it by service department 2, and service department 2's costs include plus the $20,000 of cost that have been pushed over to service department from service department 1. Okay, keep those. Now, see if this will copy over well enough. No, it did not. I need to restate the percentages as well. Okay. Now, I think I can take these and keep copying them. Unless something is going wrong here. It is. It's only equal to the amount tossed over here, right? Because we took the original 100,000 and distributed it out to the 3. And the only thing left is the 175,000 that service department 2 is throwing back at us. And over here, we only have the 20,000, right there. So let's copy that formula over to our later. This one too. And this one. Okay, and that's making sense. Let's keep copying it down, and I'll go through the pattern of it here in just a minute, and we'll look at the sums at the end and see if they match pretty closely with what we did when we solved algebraically. We just keep passing back and forth. Eventually, we get to the point where they are all passing a fraction of a penny back and forth. All right, so this is the pattern here. So we started with these costs in our service departments. We allocated all those costs out, and then accounted for the fact that some of the service departments are allocating costs to each other. So we have new balances for costs, debit balances for the two service departments. We allocate those costs out, and now we have smaller balances in the two service departments, even smaller. We allocate those costs out. We end even smaller. We end up with even smaller balances. They keep passing back smaller and smaller amounts to each other until, again, like I said, we get all the way down here. We're passing back fractions of a penny. And if we take the sum of all, well, that won't work if I do all of them. Almost all of them. I'll do a little bit of manual labor here. All of our actual allocations, I don't want to copy over the percentages, our actual allocations to production departments, which is this sum right here, and this sum right here, and this sum right here. As we've been passing them back and forth, we will end up with a number that should be about 439,000, just like in the algebraic example. Now let's see if I did that right. There we go. Okay, so we end up with 438,978.4938, which is very, very, very close. In fact, I bet if we rounded it, it's 479. Oh, yeah, almost. We kept going. We would get just enough fractions of a cent in to get that to be to round to 979, and that does round to 161,022 at this point. So yeah, okay, we'll basically get the same answer as we did algebraically. And I don't know how much of it is me just rounding it in this example. Maybe if I'd kept those numbers, we'd have exactly the same. So if this helps you visualize what's happening, we're just literally passing it back and forth. There's nothing left to pass back and forth between the service departments, but doing it through algebra instead of through this long example. What you need to know for the quiz, I don't have you do the reciprocal method in the quiz. I'm not testing you on your algebra skills in solving the system equations. It's not that hard, but I do recall in my accounting education, I didn't do the reciprocal method until graduate level class. So I've decided to leave that off, and there's plenty to work on with the direct and step-down method for you here in this class. With the reciprocal method, what you do need to know is where it ranks. It is the most accurate because it is literally incorporating all of the interdependency insofar as our interdependency is being accounted for by the cost driver we've chosen to measure. Well, 20% of the cost driver consumption is service department 1 serving service department 2. Okay, well, assuming that 20% really reflects all the work done, sure, great. Then we have completely accounted for that, and so on and so forth. But it is the hardest because even now, it's kind of hard to wrap your mind around exactly what's happening. Maybe I've explained it so well that you understand it really, really well. But that's about me, not about the method. Okay, but that's the point. More to the point, rather, is you go to the manager of production department B, or rather, manager of production department B comes to you and says, "Hey, hold on. I took an accounting class or two. I know how to do the direct method. I should be getting $94,000 allocated to me. Said you allocate $161,000. I can't buy my boat with my bonus anymore." All right, maybe they won't quite say that, but that's what they mean. Your response when you in this situation is going to be, well, algebra. And sorry, that's not going to satisfy production department manager B. Probably not. Algebra won't defend you from the chair he's going to throw at you. Anyway, it is a little extra layer that you have to account for, whereas this is a little more cut and dry. You can show them the numbers and the numerator and denominator of work done and how it was multiplied by costs. Tends to be a little easier to explain, a little less difficult. So that's why it's the most difficult to explain, most complex. Okay, so let's do a problem or two like that, and then we'll talk about transfer pricing. And it's not nearly as hard as you might think. In case you haven't looked at the chapter already, it's a blast from the past. Actually, it's going to be a lot like determining the floor and ceiling of special orders. So, if we look at, let's just jump right into an open answer question here, where I don't give you a nice table, but the bullet points here and here, they equate to a table. They basically make you a table. You should make your own table based on those bullet points. That's what I'm trying to say. Okay? Problems? Questions? What are we calling today? All right, so we have two service departments, A and B. First of all, let's look at the question stem. And what I like to write down, you can write it down, you can do it in your head or whatever, is I want to know, usually the professor here is asking some allocation from A to Y, or A to X, or B to X, or B to Y, and I like to write that down. This one is saying, Y's total cost after both service department costs have been allocated. So I'm looking for Y total costs. Now, Y has some initial costs. So initial production department Y costs. And I also need to know A to Y and B to Y. I need to know the debits that A is sending Y's way and B is sending Y's way, because that is going to be added, there we go, to Y's total cost. Y's total cost after allocation. So we need to solve for this and this. Do I care, as a student doing this problem, do I care about how much A is sending to X? No, don't solve for that. Don't waste your time. Don't solve for B sending to X. I just need to know how much A is sending to Y and how much B is sending to Y. Now, in bold, I tell you it's the direct method. We're using the direct method. All right, so let's build our little table. Nope. And I'll even make it like in the book here a little bit and zoom out. I always forget. No. There we go. And we have our costs. So I want to copy our costs over for A, copy our costs over for B, and I want to know how much they're sending to Y. This is really what I'm interested in, how much they're sending over to Y. No, we'll get to that in a second. All right, so first of all, A doesn't serve itself, so that's 0. B doesn't serve itself, that's 0. It says here that service department A does 20% of its work for service department B, 20% for X, and 60% for Y. So this 6.6 here is the one I really, really care about. I'm going to have to refigure it, but that's where my starting point. Over here, service department B, its services are consumed. 20% of those services are consumed by department A, 60% by department X, and 20% by department Y. Now I got to zero these out and refigure these based on the work just done for the production departments, since we're using the direct method. Let's make this more absolute. I want the columns to be absolute, because I'm going to go over column-wise. And when I go down, I do want it to change rows here. Okay, so here is the situation. The sum here is 0.8. So 80% of service department A's work was done for production departments. If 20% of its work so 20% over 80%, that now gives us 0.25. I told you we don't care about these, but I did them just for fun. It's so fun. We care about these ones in particular. Not make them yellow. They're not the same thing as what's up here. We care about those. We're going to multiply those by our service department amounts. And that literally is it. That's it. Great. So I did a little extra work. Yeah, I figured those things out. I factored those out. You could get away with, if you want to do this really quickly, you say, okay, I can lose the problem. I know there are 80% total here. I need 60 over 80, 75%. I can do that in a calculator. I can do that in Excel, whatever. So 75% of service department A's costs are going in. I can multiply A's cost by 75%, get that. I can look over here, 20% out of the 80% here. So 20% over 80% gives me 25%. I'm going to multiply 25% by service department B's costs. I get 162,000 here. I make sure I add those two to the initial costs, and I get my final costs. That should be the answer. Okay. It's one style of me asking you this question. Sometimes I just ask you for one, which is a little easier, right? You have less steps, fewer steps to do. Let's make sure we get a step-down question in. That's a direct. There's a conceptual question. Let's look at this one real quick. So a firm has multiple production departments and service departments. Service departments provide some service to each other. Okay, so I've just said, use your baseline assumptions that we are always using in this chapter, right? Multiple service, multiple production, and there's interdependency. The service departments serve each other. Which allocation methods can provide different allocation numbers depending on the order in which service departments are allocated? What do you think?
Not direct.
Not direct. What? Not direct, right. Yeah, because we're not factoring any of that in direct. Does the reciprocal, does order matter in the reciprocal? Is there even a way to really allocate an order? No. So I want you to infer from this reciprocal also. Let's set that aside. With step down, does it matter the order in which you allocate the service departments? Yes, it does. It changes things. So this is the only one where that's true. If this question said service departments do not serve each other at all, there would be no difference between all three methods. They'd be the same. They would be the same numbers exactly. The only reason they differ is because there's interdependency between service departments. Right? Direct method, we are denying the interdependency. Well, there's no interdependency to deny. Direct method's not going to be changing any numbers around on us. Step-down method, we're stepping down service departments to each other, but if they don't serve each other, then they're just allocating to production departments each time. And with reciprocal method, again, if they're not serving each other, the allocation basis in that system of equation equals the same number as their initial costs. So if this instead said the service departments don't serve each other, or says that there is no interdependency between service departments, then we would say they all produce the same numbers. I think there are some conceptual questions that ask that kind of thing. So there are some conceptual questions in there that help you, that test you on whether you can kind of place the three methods, including the reciprocal method. That's the one way I get you the one way I get you to be tested on reciprocal method principles without having to calculate it. So here's a question about the reciprocal method, but we're moving on. We got Wednesday if we need to as well. All right, so step down method here says I didn't bold it. Oh, I'm falling down the job here. All right, so downside up incorporated uses a step down method to allocate service department costs. All right, what am I looking for? How much is the allocation from 2 to X? All right, so this up here is our direct method problem. There's open answer too. Right down here is our step down method problem. It's multiple choice. And so we need to solve 2 to X. So that's really all I care about. Now, service department, what does it say here? We first allocate department 1's cost and then allocate department 2's cost. So what that means is that to figure out 2 to X, I'm going to have to figure out how much 1 allocates to 2. Because it says department 1 is the top step, department 2 is the bottom step. So department 2 gets some runoff. I don't know why I use water so much, but it just makes sense to me. Some runoff from department 1. So we're going to have to figure out how much goes from 1 to 2, then to get to X. Do we care at all about 1 to X or 1 to Y? Don't solve for that. Don't waste your time. Do we care about 2 to Y? Don't solve for that. No, don't waste your time. We just need to know 1 to 2 and then 2 to X. And 1 to 2, there's one little difference here compared to how I've been presenting them throughout. There aren't percentages. This is not a hard problem to solve. You can make percentages out of this table. You can convert it into a percentage table, make the columns absolute. There, now it's percentages. So these are just raw cost driver numbers. Whatever Department 2's cost driver is, 90 units of it were consumed by Department 1. 120 by Department X, 200 by Department Y. In fact, that 200 is going to become important. That's going to be, the 120 here is going to become important. First, we need to know how much 1 is giving to 2. Looks like 50% of Department 1's work was consumed by Department 2. So 50% of 1's $100,000. Nope, not the negative. This is how much is allocated from 1 to 2. Right there. I didn't do the whole table. Hope that doesn't throw you off. I'm trying to do it the way I hope you would solve the problem, just cutting out all the extraneous steps. I know 1 to 2 now. And now I need to know 2 to X. 2 starts with $200,000 of cost. It gets $50,000 debited to it. No. Google, you think you're so smart. There it is. That's new Department 2 cost. And we have to figure out these percentages anew. We can go back to this and figure out the percentages from here, if that makes it easier. We can say, specifically, we need this one right here. When you say, look, we're going to ignore this, act like it's 0. Out of the remaining departments we're allocating to, which is just X and Y at this point, because we're not going back to 1. Can't go upstream. Can't go up step. That 120 is 37.5% of the total 320 units of cost driver that were consumed. Looks like it works the same. It would work the same if we did it this right here too. Just as a double check. This percentage divided by the sum of these 2% should give us 37.5 as well. There we go. Okay, that's 3/8 of the cost. So that should be our 2 to X. So $250,000, which is our new Department 2 cost, because it got $50,000 debited to it from Department 1. 37.5% of that's going to Department X, which ends up being $93,750, which is one of the answer choices. Okay? So literally, we had to do twice as much work for a step-down problem. No, sorry. If it had been direct method, and we just have to solve 2 to X, we just have to solve 2 to X. Because it's step-down, and we're solving for the bottom step, you had to do 1 to 2 first, and then 2 to X. I'm trying to say I'm delivering on the promise of step-down has more steps than direct. That's what I'm trying to say. All right, let's talk about transfer prices. Again, we've got Wednesday. We can talk about more of these problems. There are a lot of ways to set transfer prices, and we're focusing on one of them. Just one, which is negotiated transfer prices. You got lots of ways you can do it. Companies do it all sorts of ways. Lots of legitimate reasons why you would do one versus the other. You could just tie it to the market price. What's a transfer price, first of all? All right, a transfer price is where one production department has to sell its goods to the next production department in the chain. We did this in process costing. One department, it's completed and transferred to that one department, gets debited over, transferred in the next department. Well, that's a form of transfer pricing. We have two departments, one of which is, they're in a chain, a linear chain, and the end product of one is being basically sold. We're going to treat it as if it's sold to the next department, the buying department. So we have selling departments, which is the first in the chain, and we have buying departments, which is the second in the chain. You could tie the price that they use, and so, all right, I'm going to stop myself again. Sorry. This fits into responsibility accounting because the later production department, it could only do its work because it consumed goods from the first production department. So how we're dividing up the cost of that anticipatory good in production in the selling department that's being sold off to the buying department is going to be important for holding people responsible for the choices that they've made in these two production departments. So it's a matter of debate in the company. Well, do we just act like it's for the market price? Oh, whose market price? Well, the selling department could sell this on the open market. What the buying department could buy a similar or comparable good on the open market. You have two options at least there, and possibly a variety of ways you might calculate it or create a weighted average market price or something like that. When do you sample? How do you sample? Where do you sample the market price? You could do full absorption cost, which is what we did in process costing. You got your direct materials, direct labor, and overhead through direct materials and conversion costs absorbed, and you debit that to the next department. You could add a markup to that to say, well, yeah, okay, but we also want to make sure this production department is recognized that they're adding value, and so it gets to charge the next department a little bit more in terms of a markup. You could just charge the variable costs that were incurred, and we're going to focus on negotiated price. So that's really what we're doing. We're going to create a ceiling and a floor for the negotiated price. I'll never ask you in these questions, what will the negotiated price be? Because we don't know. That will depend on who wins the cage match when the two come together and negotiate the price. Or, okay, more literally, I don't think that many companies solve this by Mortal Kombat. Literally, more truthfully, the negotiations will be more about the size of the two departments, how much political sway each one has, like company politics, Like I made the joke about the nephew, this department has nephews in this one. Okay, so we're going to pick a transfer price that favors that department because the CEO's nephew's in there. You got to suck up to the CEO. Anyway, there are a variety of things that could enter into negotiated price. We're going to see economically what is the most price, the highest transfer price they should choose when they're negotiating, and what is the lowest price they should choose when they're negotiating. And we already did this with special orders. We figured out the ceiling and we figured out the floor. The one difference that we're going to focus that will always be the case in our see this equation is hopefully brings back positive memories, maybe some negative, I hope not, but hopefully positive memories. Remember the fixed costs would often include, like if the special, back in chapter 3, special orders, it would often include like, oh, you have to buy a special license to get that licensed graphic on the t-shirt that they're ordering in the special order. Or, oh, you have to buy some special machinery for the special order. Since you're both in the same company, I don't generate any problems that have that detail. Because presumably Department 1 in the chain was created to serve the needs of Department 2. Hopefully it has all the machinery and licenses and intellectual property needed to produce a good that is fit for service in Department 2. So F in transfer prices questions here is really only going to be limited capacity costs. Remember, we had to do all that. And you're like, if you could have eliminated one, why couldn't you eliminate the capacity cost problems? Sorry, I'm mean. So the other thing that changes, again, because of the nature of it being an internal sale, is that Department 1 has a different variable cost depending on whether it's selling to Department 2, which is the variable manufacturing cost, or selling externally. Because, if I'm just taking it to the other part of the factory, I'm selling it to Department 2, I don't have to get a bunch of packaging. I don't have to ship it. If I'm selling externally, yeah, people like it being in packaging. They don't want it just on their doorstep, a raw engine piece or whatever. So yeah, there's usually a variable cost on external sales. So let me walk through this problem right here, for example. So with this problem right here, we have a variable cost of $10. That's the variable manufacturing cost. Or do I do V sub I sometimes in these examples? No, I don't. So that's our variable cost here. This V right here represents variable, and you can put a sub M or sub I for manufacturing cost, the variable manufacturing cost, or the variable internal cost. Like how much what the variable costs are actually to produce this product. Not to produce it and ship it, but just to produce it. The quantity here is 1,000. That's the amount the buying department wants to buy. And we have $100. So we have 1,000 as Q and $10 as V over here. Now the fixed cost, the problem here is that we only have capacity of 430 units. That means that 1,000 units, in order to satisfy that 1,000 units, we're going to have to kick out 570 units worth of customers. That's our lost sales in units. Our contribution margin, we have to calculate that based on what contribution margin we receive from external sales. We're losing 570 external sales, and so we need to figure out the contribution margin of those external sales. Hence, we need to include that $5. So the $40 minus 10 minus 5 is what gets us $25 as a unit contribution margin. That's why that number is there. It's not, you look at these, you're like, oh, well, revenue minus variable costs, $30 should be the contribution margin. No. These are external sales we're having to forego. So they only contribute $25 because they have the extra $5 taken out of them. Okay? And opportunity cost, I'll fix that typo, is our 570 times $25 per lost sale. So a total of $14,250 in total lost contribution margin. So that's our F. You can just put that in F right there. That's F. And all these problems, they don't have any extra. I'm 99% sure I didn't write any that had an extra thing you have to buy to satisfy the buying department. All right, so you end up with $10 plus $14,250 over 1,000. That gets you $14.25. That is your, $14,250 over 1,000 is 14.25. That's F over Q right here. Plus the $10, so these two orange things highlighted, gets you the floor price of $24.25. That's the lowest price you should negotiate because that's the literal opportunity cost, the minimum opportunity cost that the selling department is incurring by producing these for the buying department. If you're going to negotiate a transfer price, that's the lowest transfer price you should do. The buying department says, well, I can get on the external market for $35. That's the ceiling. Check. Nice, easy. You get a ceiling problem, you're happy. You're like, yeah, that's a good one. I just look at the buying department's external price and market price, and that's it. All right, I'm going to forego doing transfer price problems. We'll work on those on Wednesday. We'll do more of the service department cost allocation problems, and you'll be happy to know that that's the end of me going over principles, lecturing stuff. We're going to go over problems on Wednesday, and next week I'll go over a formal review. We'll make it as long or short as you want. As long as we're as short as we need. You and I will have a say in that. And then finals week, we're not going to meet here during the finals time. We have an appointed finals time on finals week. I'll look it up and make sure I go over it. I will be here for that time period for office hours if you want to come in and talk about problems on the final. But you're not required to be there in attendance. All right, great. Thanks very much.